In this class, we begin to ask ourselves, how come there are companies that go hundredfold, meaning for every dollar, it will give 100x or $100? And how come there are bad stocks that are actually great trades? So let's give you some examples. But before I begin, let me share that I provide a 24/7 live assisted trading guidance for those who are trading Philippines and the US stock markets. I also provide Zoom live classes and recording every Monday to Friday from 5:30 to 6:30 p.m. You are watching a free class today, and you can still watch all of our free classes every Friday. Just go to our website, www.awesome10x.com. Our membership fee is 2,000 a month and 10,000 pesos for 6 months. You are watching a free class today, and you can contact Rach through Viber in order to know how to globally invest in 10x trends. Take note that this is a class. This is a do-it-yourself investing class. We do not solicit investments. We do not trade for clients. We do not handle any investments for clients, but we just simply assist, meaning we give trading advisory and investment advice. Okay, so all of our picks can be found in the awesome10x.com/blog. You can go to the website, everything is there. You could also see that we have been publishing several articles. Some of them are free. There were our articles, How to Trade and Invest in a Bear Market, in mymedium.com, which we republished in Awesome 10x.com blog. We also mentioned Buying the Carnage Philippine Restaurant Edition, March 24. We also had a video, and you can watch it again, how we make money in a bear market sell-off. This was a video when we actually explained why Philippine stock index at 4,000 will actually go to 6,000. And we explained all the PSEI levels for many index names. We also mentioned how Shakey's Pizza during April 6, 2020 featured an undemanding valuation, as well as Pinterest, PINS meaning Pinterest. We also took a look at a lot of articles. We wrote a lot about Jollibee, URC, Capital Land. Capital Land is a Singapore company. We also mentioned Jollibee Pizza, again, Maxis, and how long recoveries would last. We took an example and so many more. Everything can be seen through the website, and we hope that you could take a look. Okay, so the question is, should you really avoid the worst sectors due to COVID, or are some of them tradable? Should you only stay with the best performing industries post-pandemic realities? So my answer to this is that we live in a bifurcated world. There are companies that are the haves, they are actually flourishing, and there are the have-nots, which are perishing. So is your company flourishing in this COVID time, or is it perishing? So narrow breath is not healthy, but this is the reality. In order to be a successful rally, we will need to see interest along the entire continuum of small to mid to big to titans of the universe. And so far, this is really actually absent globally. What we see is narrow breath. Now, we see victims and we see winners. Among the victims of the crisis, the question and what is important to understand is, does the company have access to capital? Can they survive a negative cash flow year? Can they borrow money, have financing capabilities to handle the tide? And what can they do, and what have they already done? Now, there are several reasons for some victims to recover. One of which is they have a balance sheet. They have a strong balance sheet that they can tide through the weather. Now, if the stock is down 70 to 90%, are these sufficient enough given the probabilities that they can recover in time, and how quickly could earnings come? Is it 2021 or is it until 2020? How much cash burn will they need to handle in order to pass 2020? Now, think about it. If you were the chief financial officer of the company, what would you do? If death is not the only option here, should they be able to sell stocks or allow people to buy their shares through stock rights offerings? Now, before we begin with the victims, of course, we already know who are the resilient and strong industries. We have been repeating this again and again and again, but again, we are repeating this to you. Of course, resilient and strong are your streaming companies, video gaming companies, online education, virtual healthcare, virtual conferencing, the cloud names, takeout and deliveries, as well as e-commerce. The 10x secular trends seen from 2020 to 2030 are, number one, you have social distancing, therefore an increased usage of delivery services and e-commerce being seen as more important than ever. In fact, last April 22, we mentioned that Facebook acquired a 10% stake in Reliance Industries, the SM of India, which propelled this company to go up 8% on the back of that news and another 10% after earnings. So that was actually an aggressive move for Facebook that the market actually happily took into consideration as a very, very good thing, well, when you have cash. Number two, the spike internet usage across the country or across the world. Cloud and data centers are more important than ever. Have we made a good pick here? Yes. NVIDIA has risen to $300. Microsoft is 176. Your cloud plays are actually zooming very fast, with Amazon being the number one poster child as a winner in the pandemic. Amazon hits 2470 or all-time highs. Number three, inventory management, robot associates, cashierless checkouts. Yes, we have been seeing this accelerated. And most importantly, the structural winner here is Ocado. OCDO is listed in London. And true enough, it has been doing all-time highs ever since COVID crisis. Truly a safe haven in the crisis. Stay-at-home names, games, education, definitely we've seen them resilient. In fact, V-shaped all-time highs for CD Projekt. Online education is very, very strong. We've seen Chegg in the USA go very, very strongly. Digital connections, virtual consultations, from telehealth to remote working tools. Yes, we have seen these trends accelerate. In fact, some people are saying that the reason why the US is at all-time highs, even with this unprecedented unemployment, is because what 5 years worth of acceleration of these trends has happened within 5 weeks. So not only has teledoc, which is telehealth, not only has teledoc, Zoom video communications, in fact, all the remote working tools have been going higher, such that your Facebook and Google had to compete with Zoom video, making a very strong free promotion to their remote working tools, such as their own video conferencing apps. Truly, we have seen that there are resilient sectors benefiting from the global quarantine, and there definitely are exceptions to the rule. These companies, if you take a look in their charts, ZTO Express, Alibaba, Shopify, Zoom, Amazon, Pintuotuo, JD, Pintuotuo, Mercado Libre, definitely they have exhibited not just a V-shaped recovery, but an all-time high move. Same thing with your supermarkets, consumer staples and essentials. Not only have they gone up, it has been re-accelerating even further. Of course, your stay-at-home names, video games such as Nintendo, Tencent, CD Projekt, Sony, AMD, NVIDIA, Microsoft, Shopee through Garena, SEC Limited, Activision and Electronic Arts, amongst many video games, have been very, very strong. Your online streaming, connected TV, software as a service, online education, and takeout businesses have done very well, flourishing in this COVID world, where they are Bilibili, Roku, Disney Plus, Netflix having 15 million subscribers, Disney Plus having 50 million subscribers. Telaria is now named as Rubicon. They have been doing well, handling all the connected TV advertising for anyone who's still doing advertising at this time. Of course, social media is very important such that the trade desk has actually gone V-shaped. Service now gone all-time highs, Atlassian as well, Domino's Pizza as well. These are your secular trends, and these secular trends have become more pervasive in the COVID world. Now, a lot of people are asking, shouldn't they actually fall a bit like Amazon, even if they are the most resilient companies, the poster children beneficiaries of this COVID world? True enough, we would say that some people are conflicted and some people are saying that this is a paradox in a world where there are so many unemployed. However, we would say that these occurrences are happening because they are the only monopolies that are controlling the COVID world. So you could see that Netflix, Zoom, Amazon, Walmart, that's why we call them the Dawn Z era. They are, this is your Ocado group in UK. You are having a lot of people doing online grocery shopping and robot warehouses such that Ocado is doing very, very well, from 1,000 since March to 1,700. That's a 70% move. Of course, this is more than 70 to 180 for Zoom video. We saw Netflix go from 280 to 440 in a single month. This is just 1 month. We saw Amazon go from 1.6 in March all the way to 2.4. That's a 50% move. Walmart has gone from about 105 to 130 only to get a take profit or a 20% move. You would see that we have been discussing structural winners. Structural winners have been identified as winners even before the COVID. And these structural winners are just becoming stronger. They are the 100-fold. When you ask me, why do companies go 100-fold? The answer to that question is, are they structural winners? And this week, we actually explained why URC went from 1.39 to 234. We made a deep dive on why URC was a structural winner and why it was more than 100x from its 1998 yearly financial crisis lows. Definitely, it was a deep dive, and we encourage all of you to actually subscribe so that you could read and understand all our classes where we do deep dives on companies that do 100x moves. We explained Ocado, we explained URC, we explained a lot of companies actually. And just to summarize, one of the key insights that you would learn from our Awesome 10X is that the reason why we actually named our company Awesome 10X is because we wanted you to find awesome companies that actually 10X over time. Some of them actually 100X over time. Of course, Amazon is 2,500x of your money over time. Now, investing in the best companies is really better and more certain rather than waiting for the index names to recover. When we say the index names, you could refer to the Philippine Stock Index, you could refer to the NASDAQ 100 in the USA. You can also consider S&P 500. Now, a lot of people would say, invest in the index, invest in the index. However, what we believe is invest in awesome 10x companies or invest in 100x capable names. Definitely, they are better. They are more certain rather than waiting for the index names to recover. Index is an average. As you will learn from studying all the crises, even if the index will recover 3 years in the future, assuming the index rallied 30% from here, URC would have gone up 90% or 3 times faster than index. And when index will fall, URC will not even fall. That's the strength of a company. Now, the biggest challenge that we said on URC was the 2016 Vietnam C2 wrong goal-led content, which led to massive recall, sales declines, an issue of safety, as well as competition from coffee competitors. However, it was wonderful to explain how URC managed to go from nowhere to somewhere. This is a story of a billion peso company that went 260 billion peso company, the story of URC, wherein everything you eat inside Mini Stop, whether it's the chicken or the hot dog or tocino, was actually made from agro-industrial component, Robina Farms. Truly an excellent company, and why we chose this to be in our G-Pump portfolio and why it deserves to be there. For those who are new and this is your first time listening, G-Pump refers to Globe PLDT, URC, Metro Retail Stores Gaisano, Mrs. G, P, Pure Gold, G-Pump, meaning our best conviction picks for an awesome 10X in the Philippines. Now, of course, your winners are not simply in the Philippines. We are seeing ServiceNow. ServiceNow is your cloud provider. We have been saying that for all the industries such as Procter & Gamble, Unilever, all of the big companies would need to have a cloud enterprise software to provide for them. That is served by ServiceNow. And as you can see, these are your 10X companies, your 100X companies, and including the COVID sell-off of 240, not only do they quickly come back and recover, they even go all-time highs, even when the index is suffering. These are your leaders. Atlassian, which is your Microsoft for Australia, is also hitting near all-time highs, 110 last March. Now, bad stocks would fall due to their long-term fundamental uncertainties. However, bad stocks would temporarily rise due to sentiment, short covering, trillions of stimulus. However, long-term downtrend intact. However, for people who are trading, we take note that stocks that fell 80%, meaning from 10 to 2, can also rise 80%, meaning 2 can go to 3.6. Which industries are doomed to fail from COVID? Okay, these are what people believe are doomed to fail. Oil, gas, and drilling, non-essential retail, brick and mortar department stores, transportation, airlines, retail specialty stores, meaning non-essentials, your gyms, your movie theaters, your leisure, toys, games, and hobbies, commercial leasing, aka your malls, your offices, restaurants, and coffee shops. Now, these are opinions and these are what truly happened. Some of the best rebounds were considered doomed, but were not really doomed, hence their spectacular rises. Among the restaurants, Papa John's got pummeled down, but they can handle pizza delivery. Among the names that got pummeled down was the Trade Desk, which was the leader of digital advertising. It's actually one of the leaders. It's third to Facebook and Google, of course. The Trade Desk handles every advertising on your mobile phone. And as we were saying, when you are asking people what's the most expensive real estate, the most expensive real estate continues to be your mobile phone. And even if it's just a company trying to sell you a food panda delivery, it's still called digital advertising, which is actually being programmed by TTD, the Trade Desk. Even your political campaigns for 2020 in the USA, that's pretty much booked and booked through TTD, the digital trading, the trading desk, the Trade Desk. Now for connected TV, most people know Netflix, but most people are unaware that Roku is a winner in a connected TV revolution. We have shown that these three companies have in fact rebounded and well on to their V-shaped rally recoveries. This is your Papa John's. As you could see, after a drop to 28, this is more than 100%, going as high as 72, even topping the Feb 20 COVID time, making all-time highs. Now take a look at the trade desk. After seeing it 320 fall to 140, a quick V-shaped recovery as much as 300 or 292. Now Roku also fell from about 150 all the way to 59, 120 now. What we could see and what you have to know is that if you have a secular long-term winner, the COVID crisis is a very, very bad thing. However, what you could see in the US is that the COVID crisis is a one-time event, and they can recover. Now, you could answer me that maybe this V-shaped recovery is not sustainable. It can also fall. However, the fact is that V-shaped recovery was fundamentally oriented, and hence those drops, assuming Roku drops 95 to 105, will be bought by secular long-term buyers. Same for the trade desk. For those who will sell at 300, assuming they'd sell, would still prefer to buy 220 to 240. Same with Papa John's, meaning at any recent drops and pullbacks, they would become long-term secular winners. Now, some of the best rebounds would rally on hopes of just faster than expected reopening. Example, we know that nobody can go out, so there is no business for Planet Fitness, which is a gym. There's no one dating, so it's all virtual right now. So dating apps such as Tinder or Match has been affected by COVID. Of course, retail segment Nike cannot sell a lot of their shoes, except that they can actually do direct to consumer trends, meaning Nike can sell and deliver to your doorstep if they want you to buy their shoes. Restaurant sectors, Chipotle and McDonald's, have been rallying, not just because of the faster than expected reopening, but because they can show you that they can pivot to a world of COVID. Of course, concerts such as Live Nation is having a problem, but as you could see through these charts, take a look at how they have recovered. They are considered your bad stocks, right? Planet Fitness has rallied from 24 to 64 after falling from 88. Match Group falls from 92 to 44, but rallies to 81 as of this time. Of course, these could also not be sustainable rallies, as some people would say. These recoveries are not fundamentally oriented. You can see Nike rallying from 100 down to 60, back to about 90, showing that some people actually believe that Nike is able to sell even in a COVID world. This is your Live Nation, the leader of concerts and actual live entertainment. 76 falls to 21, rallies to 44. As you could see, these bounces are substantial, most of them 50%, 100%. So they are really, truly immense rebounds. Very strong rebounds. McDonald's goes from 125 to 187. That is a more than 50% rebound, which actually explains to you why it is not a no. It is actually a no-brainer for us to recommend Jollibee. We called a buy on Jollibee Pizza, Shakey's Pizza, and Max's, truly because we have been trading global markets as well, seeing that McDonald's, Starbucks, Shake Shack, QSR, Chipotle, all of these restaurants are not doomed to fail in a COVID world, and they would have people willing to buy them fundamentally, even if it takes a longer time. As you could see, of course, McDonald's is more resilient. However, Shake Shack also managed to rally from 30 to 55. It used to have a resistance at 45, but we saw it expanded and go from 45 to 55 on account of being able to handle with more cash as they sold some shares to help them through the tide. So if you're wondering if Shakey's Pizza or Max's restaurants, we have been publishing articles on the restaurant space that we even call them the Carnage stocks, the Carnage edition. And we even made a meme of Popoy and Basha saying that, of course, restaurants are truly wonderful distressed assets that you could buy in a COVID world. As you could see, this is restaurant brands rallying from 68 to 24 all the way to 49 for a 100% epic run. So the question is, can Shakey's go to 7 or 8? The answer is yes. Can Max's go to 7 or 8? The answer is yes. Can Jollibee go to 160 to 180? Again, the answer is yes. You could see it from the USA moves. This is your Domino's Pizza. As long as they can handle the e-commerce and pivot there, the answer is yes. Now, Domino's Pizza has been the leader whenever it comes to delivery. It even is seen more as a technology company rather than a food company. They just happen to deliver pizza. Yes, you are seeing this correctly. It traded for about $3 going 360 or a 100-fold move. So the lesson here is if you have a secular trend winner, you might want to use this COVID time to add an average up on your secular winners. Chipotle Mexican Grill, as you could see, Chipotle is a stock that went from about 40 to 900. That is also a 10x, 20x company. And similarly, even during COVID, some people just averaged down. If they had a high price, they bought more when Chipotle fell to 440 and V-shaped recovery. This was an earnings pop. Actually, from 800, it rose to 900 because Chipotle had been seeing an increased demand on their delivery segments. Now, of course, some rallies are disappearing because the hard reality sets in. The negative $40 oil is still true because there is no demand or hardly any demand with everyone stuck at home, social distancing and lockdowns all over the world. As you could see, this is your Royal Dutch Shell after falling from about 28 to 10, recovers to 18. However, that rally is faded to the downside. That rally, however, is still an 80% move. Now, this rally fades to the downside because Royal Dutch Shell truly had to slash their dividends. As you can see, when reality sets in, they are still facing a collapse of oil prices. Royal Dutch Shell had to cut their dividends for the first time since 1945, or that's since 75 years, okay? And so all of the companies in the oil segment are still wondering what their life is post-COVID. Should they all be bankrupt after this event? ExxonMobil, ConocoPhillips, all are slashing their dividends. And arguably, Shell's decision to cut their dividend is to show that they have to be more prudent and they have to save on their cash as we go in a world of renewable energy. Royal Dutch Shell has been importantly arguing that they have been leaving the oil market for some time, but they do believe that they don't know the future, and so they would rather cut their dividends. This means that there is a potential fade on rally. ExxonMobil, after going from 30 to 48, yes, that is a 60% move, could fade all the way down again to 37 and 30 bucks. Now, you'd also see Chevron rallying from 51 to 92, and now this rally could go fade away all the way down to 65. Of course, there are some retail companies, since non-essential goods such as clothing, you've seen Burberry warn as of March that they would have very bad sales as coronavirus is spreading with all of their stores closed down. Now, this is your Burberry rising from 1,000 to 1,500. That is still a 50% rally. But again, that rally is suspect and not sustainable, such that it could probably fall down. This is what you call a potential retest or a pullback back to 1250. As you could see, their pullbacks are still higher lows and not a retest of 1000. You could see Tapestry. Tapestry is the owner and another retail company in USA. I think Tapestry owns Kate Spade, Coach. So who is buying bags now? You could see 28 falling to about $10, rally to about 17, fell a bit to 15, but still from 10 to 17, that was a 70% recovery, or what you'd call a dead cat bounce for those who are trading bad names. These are called dead cat bounces. PVH, the owner of Calvin Klein, you could see that from 110, it fell to 30 bucks. It rallied all the way to 56. That rally was, of course, not sustainable. Now at 49, it can fall to 41. However, as you could see, these rallies are substantial. That is a 100% move from the lows. Capri Holdings, the owner of Versace, the owner of Gucci, the owner of Jimmy Choo. So these are expensive luxury items, of course, with the COVID world. Who has the money to buy Gucci, Versace? Well, of course, some of the richest people can still buy. The thing is, they are being priced at doomsday scenario. So there is a substantial rally. Capri Holdings rose from 5 to 16. I bet that if you bought near the lows, 300% move, you wouldn't say something bad buying luxury items someday. What's the story here? Of course, we know that luxury is not gonna be a good company. It's not a bestseller. Our title is Why Can Bad Stocks Become Good Trades? Because someday there will be a woman out there who wants to buy a Gucci bag. Some woman out there will buy Versace. In fact, I would like to show to you that some movie theaters went 100% up in this week alone, even if nobody's going into the movie stores. How come do these happen? Because these are doomsday scenarios wherein the companies are being priced for bankruptcy. So of course, there is a top story for those who are not aware. The Philippine government has finally allowed your POGOs to partially open. For those who don't know who POGOs are, they are Philippine online gaming, offshore gaming company, online offshore gaming companies, and they are being complying on some guidelines. What does this have to do? Okay, for those who don't know, these are your casino stocks abroad. Scientific Games, lottery online, all the slot machines and sell softwares to all these casinos. It has rallied 300% from 4 to 12, as much as 13. Now, should it retest, we see people buying at 845 to 1145. That is indeed a 300% move. A while ago, you saw the great names. They were up 50%, they were up 70%. But the bad names, these are called your bad sectors. The bad stocks can actually also do a really good job of giving you a return if you know how to buy and how to sell. This is your Win Resorts. Win Resorts goes from about 35 to as much as 85. That is more than 100%. This is your Penn National Gaming from $3.64 to about $17.82. That is more than 400% move. So to the question that people ask me, can I buy Bloomberry? The answer there, and we answered already since March, yes. At 4, 5, you buy, you could sell at 6, 7, 8 someday, maybe in a month. Now, there are these groups saying that Philippine air carriers, the recovery of the aviation sector will take 1 year, 2 years. You could hear all the bad news. But what does the chart tell you? Okay, the chart actually tells you that the airlines are really the worst sector to be in. And even when it comes to the rally potential, they are still the weakest. Delta Airlines goes from 20 to 33, goes back down, back to about near 21, rallies to 26. They are very, very weak. United Airlines rallied from 18 all the way to about 38, fell down again to 20. It is a roller coaster job. It will not rally so much, but there is still those small, feeble bounces. American Airlines goes from about 10 to 14 and so forth. Boeing, you have nobody buying airlines, so 88 all the way to 180 fell down, and so nobody knows if it will go back up to 180, but that is still a 100% move from the lows. Okay, we are seeing that if the airlines can also significantly give a bounce, not too significant, that means that your Philippine companies in the airline space, meaning Cebu Pacific, which is listed, can trade from 38 to 65. If you can buy near those lows of 38, 40, then you have a significant upside in your at your side. Now, for macro Asia, we think a 50% bounce is possible. So we are seeing 4 to 6. Near 6, you sell. Near 4, you buy. That is how you trade the ranges for these companies. Booking.com, it's also in the tourism space. That is where you book your hotels, your airlines, all of those things. It is tradable from 1.1 to 1.4. Take note that these things have been said all throughout March and April. It's now the month of May, but in these sectors, you really have a 50 to 300% range on your casino sector. If you want to buy some really, really badly hurt victims, you might want to trade those with 2 to 300% ranges as they give that upside for you. Of course, the oil and gas, you could see that it is a fade away. The rally is not going to be sustainable. So unfortunately, Shell Philippines didn't even rise to 26 where we thought it could go there. We just think it's a fade away. So we were correct. Chevron, we thought will hit 88. So far, it went 92. These were predicted since March. So some of them actually rallied all the way. I think Petron did rally to about 3. So that was correct. Shell didn't rally. Now, of course, with those dividend cuts, with those negative oil, with real demand not being there, of course, they have a retest potential back to those lows. Now, of course, among the sectors, we were saying that you have an idea to buy restaurants. We actually did that for McDonald's, QSR, Chipotle, Yum. This is your KFC, Yum China, your KFC in China. Actually, all of these targets have been hit, even going higher than where we expected them to go. So really, the restaurant sector, we are upgrading targets. Like some people are asking me, well, can you see Jollibee go to 150? I say, how about 160? Not even 150. You know, some people ask, can Maxis go to 7? It seems as if, no, not just 7, can even go to 8. So actually, the restaurant sector can have a stronger bounce potential. For those who want to read and reread, this was published March 24, Philippine edition by the Carnage. We were also saying buy the Carnage on restaurants in the USA. And truly, the US was worth it. We were saying that the risk reward in your life is to lose 1 and win 17. Your goal is actually to buy small and to buy more as the price confirms that you are correct. So for those who bought Maxis, even at 6 below, you want to add more because the price is already telling you that we are correct. Similarly, for those who bought Jollibee, when we published, it was about 95 to 99. Indeed, we got a very low price for Jollibee. That also means that even at 140, 130, yes, we're averaging up because the price tells us that we are correct. Same for casinos and restaurants. Of course, this is your restaurants. This was published. As you could see, nobody wanted restaurants. Nobody wanted coffee shops. But we were publishing, this was around March 23, March 26, to buy Starbucks here at 65 with a target of 75. Indeed, Starbucks went even more. This is your afterwards. Starbucks went to 76, 77. That is indeed a rally to love. We were saying that Square, for those who were into the payments play, Square was a very good company to begin with. They had a secular good company. Square at even during March fell as low as 36, but even at 46, you were willing to buy. Now I think Square is trading at 65. So that is a substantial movement. Now, bad companies, Jumia is actually a bad company because this is an e-commerce Amazon in Africa. Some people were even saying that they might be fictitiously uh, making up their sales. So the thing is, because it's still in the right sector, it's still the Amazon of Africa, even if maybe Africa doesn't have any consumption to spend upon. When it presented a buy signal at 273, we felt, okay, you have to give a buy signal here. And that indeed went from 273 all the way to 439, even rallying to 480. Meaning that even if fundamentally we knew that these were bad stocks, it didn't mean that we could not trade the bad stocks. This is Shentra. Shentra's business is breast surgery, breast implants. So they sell breast implant silicone surgery. They also sell those Miradry armpits because this is considered a luxury because who would want to have their breasts enlarged if they don't have money to spend? So you could see that it really fell and tanked. But once we saw that this company would not go bankrupt and it would have cash, it moved from 1 to all the way to about 280. On that retest near 193, we mentioned to buy. Lo and behold, Shentra indeed went to 280 this week, and now it's going back again to 220. We would buy any prices near 2 below again for another trade. Next move about 3 to 340. Of course, we were also saying that there are teledentistry candidates, not just, so we like secular trends. This week we said Smile Direct Club was an interesting stock that we might need to buy, and we gave so this is your Shentra. After that massive consolidation at a higher low near 175, rallies to 285, that's a retest, and then another, of course, profit taking. If it goes back here from 193 to 215, we would say buy there for the next move to 285 and 346. As you could see, you could make money on bad stocks. People say you can't, but these are proofs that you can trade bad stocks. Smile Direct Club, okay, there was bad earnings here because of, they were saying that Smile Direct Club had a lot of problems when it comes to braces and so forth. So less people. However, we were explaining that as of March and April, the company has been able to get awarded and accredited by the American Dental Association, and it was actually gonna go stronger. With this gap up from 5 to 6, we gave a buy signal 2 days ago here at about 650 to 680. Last night, it went as high as 780. Our target is 850, but eventually we believe it can actually go all the way to 11, 12, 15. The IPO price is $23 because Smile Direct Club now has an 18-year patent, and everyone who wants to have their braces, teledentistry, they only have Smile Direct Club to help them. So they are a very strong COVID-proof company. That's why we said Smile Direct Club is a company pick other than Zoom and Teladoc. Okay, so it's 6:25. I've mentioned a lot of companies. I hope that you've learned a lot through our presentation. Are there questions, if ever? Are there questions so that I could answer them?
There are no more questions for now.
Okay, so without any further ado, I hope, without further ado, I hope that you have a good dinner, and I hope that I help answer questions for you. The answer would be number 1, start small. For those of you who don't have any accounts, you don't have a stock market account, we provide guidance, we provide classes, we provide help. what we want you to know is that for only 2,000 pesos, I have that per month. I have so many classes to teach you, to provide you guidance. And so far, I would have to say that even by just reading our articles, you would make money more than compensating that 2,000 pesos monthly fee. In fact, you would earn more and learn. You could start as small as in the US, for those who are not aware. You can open an account in Interactive Brokers for as little as $1,000 to $100. Honestly speaking, they don't even have a balance. They have zero minimum. And then in the Philippines, you can open with several brokerage firms. Of course, I would like to promote that I work for a Philippine brokerage firm. So you could open with Wealth Securities, www.wealthsec.com. You can ask me how to open an account so that you can start small. The point here is that you can learn to earn. And let's assume that you've always wanted to buy, Shakey's Pizza. You've always wanted to buy Jollibee and Max's. And you've always wanted to buy Starbucks. Well, lo and behold, you have these companies that are tradable, and some of them are really, really resilient, especially when the social distancing in the future gets ended. So if you could make 100% someday in those companies, why not? So I urge you to actually start learning, investing, and investing in trading, because there's money to be made both in the good stocks and in the bad stocks. And I hope that you all go to www.awesome10x.com. These are, let me go to our website again. Sorry, there's that website here. So you'll see our articles. All of our articles are there, our videos. Thank you. All right. See you again. Every Friday is free class.